It's the worst start to the year ever, and perhaps it's the tech and the subsector of social media that could be getting hit the hardest. Take a look at this. Twitter, Fitbit, GoPro, all touching new all-time lows today, but Twitter specifically at $19.71 leads us to this question: does it mean there's something even bigger coming? Charlie Gasparino, you've been working the phones.
I can just tell you from my hedge fund sources, what hedge fund sources are telling the Fox Business Network is that what you see is a degree of liquidation in hedge funds going into cash in a major way. And I asked this question among my hedge fund people: is this a puke? Is this something that is
Such
just
a lovely term?
No, but that is the market term for something that comes. You puke it out, it goes fast. I mean, I'm not just making that up. Or is this something more systemic? And what every one of them says is they think this one is more systemic. That this is definitely a beginning of some sort of a correction, because the hedge funds are now moving into cash in a more demonstrable way after a really rough 2015, we should point out. And that is adding to selling pressure on the major indices, and particularly in tech, because, remember, these tech shares, a lot of people thought were overvalued. Right. I find it fascinating, though, that Twitter, which I don't think anybody thought Twitter was overvalued over the past 3 or 4 months, is getting hit among the hardest. And then this begs the question, Liz, at what point does Twitter become, again, ready for takeover bait? I've always said this, that when they fall below 20 in a significant way, if they fall to 15 or something like that, I can't imagine they can't sell this. They won't sell it, or someone can't buy it. Well,
you're saying 15. The previous close on Friday was $19.98, the previous low close. Yeah. Right now, we're below that at $19.69.
I mean, what is the market cap of this company now? We were just discussing.
I believe $13 billion.
Okay, so if they're a $10 billion market cap company, Facebook can afford this thing.
$13.6 billion.
Facebook can afford it and pay somewhat of a premium from this.
It's down 50% year over year. Would it be hostile? I mean, what are your sources thinking?
Who knows? One thing, I don't think it would necessarily be hostile, because as we reported before, Twitter's management is somewhat open to this. I mean, they're telling bankers, I mean, I know this from my banking sources, that they'll consider anything at this point. They really, they are not telling people go away. They're not pulling a Jeff Bukes as he did with Time Warner, like, we don't want your money. Right, you know what I'm saying? We can go at it alone. This is a different. This company is conceding through its Wall Street advisors that it is open for sale. I just think that most people are staying away from it because they think they're waiting for it to fall further.
The heavy hitters are all picking up, packing their bags and heading to Davos, as you and I are.
Yeah.
And Anthony Scaramucci, and one of the most popular segments that we came up with last year was Davos Dish.
Right.
And we're going to be doing that. We are going to Davos. Charlie, me,
you know what's
Maria,
going to be interesting at Davos?
Yeah.
It's going to be interesting because I think the markets are going to could sell off.